Nice. Hi. Hello, everybody. Hi, we are live today, a few minutes behind usual, but it's been one of those days. We were hoping to go on about 4 o'clock. It's about 4:12 now. Here we are, Alice Scott,
Eric Ship,
the Scott team of Long and Foster, here for our Monday information session. And this week's session is on mortgage forbearance. And we use that kind of, is COVID-19 a mortgage holiday, to kind of grab your attention, hopefully, as kind of our lead in here, to say no, it is definitely not. So don't go saying the Scott team said y'all didn't have to pay your mortgage, because that is not what we're saying.
Yeah, there's been a lot of confusion about the difference between forbearance, what that means, right? So basically, it's an agreement between a lender and the purchaser or the borrower to suspend for a time period, either lessen the payments or to suspend the payments entirely for a certain period of time. This does not mean that you don't have to pay your mortgage. That means you will, but you will need to pay your mortgage at the end of the time frame. Mm-hmm. Everything involved in the mortgage, insurance, everything that comes along with the mortgage that you normally pay, but you will need to talk to your lender.
Your servicer.
Yeah, your servicer. Sorry, your servicer. Yep. Don't just assume that you cannot pay your mortgage.
Yep. So it's a good thing for short term.
Yeah.
So again, if anybody has been caught up in the short-term, hopefully temporary unemployment situation that so many people, I think the last count was like 22 million in a couple of weeks. So if you've been caught up in that and you are concerned in paying your mortgage payment, call your servicer if you want to talk about forbearance options. So it's really supposed to be kind of a short-term, either lessen your payment or delay it.
Yeah, it's designed for, financial strife periods in life, not for getting out of your mortgage payment.
Right. Not a mortgage holiday. If you can pay your mortgage, pay it. Because the other thing that even if you apply for mortgage forbearance, I was talking to a lender last week, the lenders and the credit bureaus have not figured out how they are going to handle this COVID-19 situation. And if people have applied for mortgage forbearance during COVID-19, it still could negatively impact credit. Yep. So if you can pay your mortgage, do it, because they're not really sure yet what impact it could have. Even if they give you the forbearance and you get a little bit of a break or a delay in your payment, it still may have a negative impact on your credit because it still may show as non-payment for a certain amount of time, whether it's 30 days, 60 days, 90 days, whatever you work out with your mortgage servicer. So ask all those questions when you call them. And just so you know, with COVID-19, Fannie Mae and Freddie Mac have put out some guidelines for any of those mortgages that they back, and they back more than 2/3 of mortgages in the United States are backed by Fannie and Freddie. Yep. And so we just wanted to kind of go over a few of those in case you had questions. But again, you can't just do it on your own. You have to talk to your servicer and get them to agree to the plan. But, they have said that mortgage forbearance could be reduced or suspended up to 12 months. Again, got to talk to your servicer, but it could be up to 12 months. And basically you would need to show that you've been negatively impacted by, the COVID-19 situation. So whether you've had a temporary job, what is it?
A
layoff or a temporary. Why am I blanking on the word right now? But anyway, and then furlough. That is the word, furlough. I was looking for the word furlough. If you've been furloughed or laid off due to the COVID-19, you could qualify to do this. But again, call your servicer. And also they have suspended or delayed sales, foreclosures and evictions till at least May 17th. So hopefully, again, no one's close to that situation. But again, if you're having trouble, don't just not pay. Not a holiday. Not a holiday.
Lenders have also suspended late payments to the credit agencies also, right?
Reporting, yes, they are able to delay any reporting of that late payment at this point. But again, down the road, they may report some of those as non-payments to the credit bureau. They're still figuring a lot of stuff out, like we all are.
Yeah. I mean, the rule of thumb is really just if you can pay it. Is obviously always the best thing to do.
Definitely.
I know it's be a nice break, but It's gonna be difficult to navigate, and
we're all going to have to pay it back at some point.
yeah,
So
it's gonna have
yeah.
to be paid at some point. So,
So, well, we hope this maybe answered some questions, got some conversations started if you need them with your servicers, your loan servicer, and comment with questions. We'll pay attention to the replays and try to answer them as quickly as we can. Share it if you think it'd be good information for others to have. And we really appreciate your time today.
Thank you very much.
Thanks, everybody.